Hello and welcome back to Global Value. In today's video, we're performing a fundamental stock analysis of Colgate-Palmolive Company, ticker symbol CL. We're looking at Colgate-Palmolive because they are a Dividend King. Dividend Kings are members of the S&P 500 that have consecutively increased their dividend payments for each of the past 50 years. Colgate-Palmolive has increased their dividends for each of the past 59 years. They're closing in on being a Dividend King for almost a decade here. They also currently have a 2.7% dividend yield, which is better than that of an S&P 500 ETF. With their strong historical track record and being a CPG company, we're looking at the company's fundamentals to see how they're comparing to its valuations currently. So Colgate-Palmolive is currently trading for $68.99 per share. Over the past year, they are down 8%. Over 3 years, their shares outstanding are about flat. They're only down 2% over this time. Over 5 years, that's also the case. They're only down 3%. Going back 10 years, they've compounded at a rate of 2.5%. And going back prior to the global financial crisis, over the past 18 years, Colgate-Palmolive has compounded their stock price at a rate of 6% annually. Keep in mind, this does not include their dividends. Currently, as mentioned, they have a 2.7% dividend yield. The other major reason we're looking at Colgate today is because they just hit their 52-week low. They're trading 25 cents over their 52-week low, which is down about $16 from their 52-week high. Colgate-Palmolive is a large business. They have a $57.5 billion market cap. For background about the business, since its founding in 1806, Colgate-Palmolive has grown to become a leading global consumer product company. In addition to its namesake oral care line, the firm manufactures shampoos, shower gels, deodorants, and home care products that are sold in over 200 countries. International sales account for about 70% of its consolidated total sales, including approximately 45% from emerging markets. It also owns specialty pet food maker Hill's, which sells its products through veterinarians and specialty pet retailers. Colgate-Palmolive has over a 200-year history, and it's headquartered in New York, New York. For our fundamental analysis today, we are performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of Colgate-Palmolive based off of their business fundamentals. So this analysis is still a work in progress, and it's an opportunity to learn in public. It will continue to evolve and improve over time. With that said, let's get right into today's analysis. Starting off with metric number 1, we want their average return on capital over the last 5 years to be above 14%. There are a couple of reasons for this. The first is that the average publicly listed business earns about a 7% return on capital. The second is that over the long run, over the course of decades, a stock is going to return approximately what its underlying business returns, and these underlying business returns are going to be captured here by return on capital. So by looking for companies that are averaging 14% or higher, we can potentially build in some margin of safety for ourselves based off of the overall quality of the business. Colgate-Palmolive has been producing just stellar returns on capital throughout this time. In 2017 and 2018, they were producing about 55% returns on capital. That dropped in 2019. But even so, coming in at about 40%, those returns are still stellar. Over the 5 years here, Colgate-Palmolive is averaging 46% returns on capital, and over their last 12 months, they're averaging about 40% returns on capital. So this is a massive check here on metric number 1. Their returns on capital are 6 times better than average, and 3 times better than that 14% metric we're looking for. They are able to earn extremely high returns in their business. Next up for metric number 2, here we're taking a high-level overview of the cash coming into the business. We want their revenues, earnings, and free cash flows to have grown over the last 5 years. Colgate-Palmolive has grown their revenues from $15.5 billion to $17.5 billion. Their earnings are also slightly up from $2 billion to a little under $2.2 billion. However, even though their free cash flows are up from fiscal 2017 to fiscal 2021, over the last 12 months, they've only produced about $2.4 billion of free cash flow. And so that is actually going to be slightly below what they were producing in 2017. Although it's not down by much, technically their free cash flows are down over this time. And so this is going to be our first X here on metric number 2. Metric number 3, here we're taking the perspective of an individual shareholder in the business. We're looking at the company on a per share basis, and we're looking for 5-year earnings per share growth. So this is building off of the previous metric where we saw that Colgate-Palmolive has increased their earnings over this time. Similarly, their earnings per share are also up. And in fact, their earnings per share are up at a rate that's faster than their overall earnings. This clues us in that the company has been buying back shares over this time. And indeed, if we look at their shares outstanding, They've bought back approximately 5% of their shares over the last 5 years. It's great that their earnings are up and that they've been buying back shares over this time, because when you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. So when a company buys back shares and decreases the number of shares that they have outstanding, they're increasing your ownership percentage in the business, which is ultimately going to increase the percentage of the business's profits that you're entitled to. Shareholders in Colgate-Palmolive have experienced that over this time. Not only have the profits that the business is generating gone up, each individual shareholder is also now getting a higher percentage of the company's profits than they were previously. So this is going to be our second check here on metric number 3. Metric number 4, very similar here. We're looking for 5-year free cash flow per share growth. So even though their free cash flows are slightly down over the last 12 months, netted out with their buybacks, over the last 12 months compared to fiscal 2017's results, Colgate-Palmolive's free cash flows per share are exactly flat. They're still earning $2.84 of free cash flow per share. So even though they're flat, we were looking for growth here, so this metric is technically going to be our second X. So far through 4 metrics, we have 2 checks and 2 X's, but our X's have not been off by hardly much at all. Another thing to note here is that over extended periods of time, talking 10 years plus, we roughly want a company's earnings and free cash flows to be about the same. And so over this 5-year stretch, that's looking to be approximately true for Colgate-Palmolive here. Next up, for metric number 5, we want their net debt, which is long and short-term liabilities minus cash and short-term investments, to be below the amount of free cash flow that they produced in the past 5 years. So currently, Colgate-Palmolive has about $6.9 billion of net debt. They've decreased their net debt by about $100 million so far in 2022. And over the last 5 years, they've earned approximately $14 billion of free cash flow. This is great here because relative to the debts that the company is employing, the business does not look like it is overly levered, as they're able to easily support this debt with their free cash flows. And so this is a sign of a conservatively financed business that's in a very healthy position, especially as a branded consumer staple company. So this is another check here on metric number 5, and so far through 5 metrics, we have 3 checks. Then finally, the big metric of all, metric number 6, we want their average free cash flows to their total enterprise value to give us a yield above 5%. If this is the case, this will give us a slight risk premium to the risk-free rate of the 10-year treasury and give us a reason to potentially be interested in the business. Currently, Colgate-Palmolive has about a $65 billion total enterprise value, and we learned that in the past 5 years, they produced about $14 billion of free cash flow, which means that in an average year, they're producing about $2.8 billion of free cash flow. So when we divide their $2.8 billion of average free cash flow by their $65 billion total enterprise value, that is going to give us an average free cash flow to enterprise value yield of about 4.3% here. While this is slightly better than the rate of the 10-year treasury currently, this is below that 5% metric we're looking for. So this will be an X here on metric number 6. Also worth going over is that over the last 12 months, Colgate-Palmolive has produced $2.4 billion of free cash flow. So to get a current free cash flow to enterprise value yield, when we divide their $2.4 billion of their last 12 months of free cash flow by their $65 billion total enterprise value, that's going to give us approximately a 3.7% current free cash flow to enterprise value yield. So while that is down compared to where they've been at over the last 5 years, they're still just about in line with the rate of the 10-year treasury. Then one of the major reasons we're looking at Colgate-Palmolive today is because they are a Dividend King with a 59-year track record of increasing their dividend payments. So here we're looking at their dividend profile. People make mistakes all the time by blindly chasing dividend yield, so it's important to stop and look at the fundamentals of a business to determine whether their dividends are healthy and supported by either that business's earnings or their free cash flows, depending on the type of business. For Colgate, it's no surprise that as they've been buying back shares and increasing their dividend per share have gone up over the last 5 years. Also, their free cash flows per share are exactly flat over this time, but for each of these 5 fiscal years, they've gone up overall. In all 5 of these fiscal years, Colgate-Palmolive has been able to comfortably support an increasing dividend payout. So if their track record is useful to help indicate a projection for the future here, then it looks like the company's dividend is in great shape, that it's healthy and supported by their free cash flows, and should be pretty sustainable going forward into the future. Then finally, here we're using a discounted cash flow model to come to a potential fair value for Colgate-Palmolive. So starting with their current free cash flows per share, and then projecting a growth stage over the next 10 years out into the future, based off of their historical rates that they've been able to grow their free cash flows over the past 32 years dating all the way back to 1990. Then assuming a terminal growth stage over the next 10 years out from that, so projecting 20 years out into the future where their growth rate is slashed in half. We're not going to be adding in their tangible book value because this is skewed negatively due to their share buybacks throughout this time. This has to do with the logistics of accounting for share buybacks, which doesn't give us a correct approximation of their tangible book value here. Then if we're looking for a 10% rate of return going forward over the next 20 years for Colgate-Palmolive, at today's stock price of nearly $69 per share, it does not look like the business has an adequate margin of safety in it based off of these historical growth numbers which are used for this projection. So you need to determine for yourself whether or not these growth numbers are accurate and whether or not they're applicable here, especially projecting them out into the future. If you believe these baseline assumptive numbers, then a fair value for Colgate-Palmolive today would be approximately $52.50 per share for a 10% rate of return going forward over the next 20 years. Keep in mind that this would be including their dividend yield, and they currently have about a 2.7% dividend yield. Using these same numbers and these same assumptions, based on today's current prices, you could reasonably expect about a 7% rate of return going forward on Colgate-Palmolive. Keep in mind that this type of analysis is not financial advice and it is not a buy or sell recommendation of any security. Before considering any potential investment decision, please consult with the properly licensed and registered financial and legal professionals. And please do your own homework to understand if these numbers truly fit in a model for Colgate-Palmolive here. So in summary, Colgate-Palmolive has a split with 3 checks and 3 X's. However, on almost all of their X's, they were just very slightly off. So this business is likely of a higher quality than what's reflected here in this beginning analysis. Colgate-Palmolive is earning extremely high returns on capital that they've been able to sustain over this time. They've also grown their revenues and their earnings, but their free cash flows are slightly down over this time. Due to share buybacks, they've seen their earnings per share go up. Then the company is not overly levered compared to their abilities to produce free cash flows, so they likely have a strong financial position going forward. Based off of their average and their current free cash flows, it would seem that the business is currently trading with a free cash flow yield that's approximately in line with the return from the 10-year treasury. Then looking at the company's dividend track record of consecutively increasing their dividends for each of the past 59 years, Colgate-Palmolive has been able to comfortably support an increasing dividend over the last 5.5 years and have had only modest payout ratios at best, which means that it's likely that the company will be able to continue their increasing dividends into the future. Finally, performing a discounted cash flow analysis of Colgate-Palmolive based off of their historical abilities to grow their free cash flows, which you need to do your own homework on to understand if they're fitting or not for the company, that for a 10% rate of return going forward over the next 20 years for Colgate-Palmolive, you'd have to wait for the company's share price to come down to about, from today's current prices, again using those same historical growth assumptions, you could reasonably expect about a 7% rate of return going forward from the company, including their dividend yield. Again, none of this analysis is financial advice, and instead this type of analysis serves as a holistic and beginning understanding of Colgate-Palmolive to help you determine whether it's worth your time to dig in and learn more about the business going forward. If you're interested in learning more about Colgate-Palmolive, I would highly recommend diving into the company's 10Ks. You'll get a history of the business and a history of their operating results. Management will also lay out some of the potential risks that the company faces, in addition to providing their commentary on the challenges and opportunities that the company is faced with. And you'll get an understanding for both the competence and the character of management, especially when it pertains to both their capital allocation and their business strategy going forward. If you want to learn more after you're done with that, I would also recommend reading through some of their recent earnings call transcripts to understand how the business has fared since the COVID-19 pandemic and to understand the business's operating results on a quarter-by-quarter basis and understand how the business is operating currently. So as a value investor, you're ultimately trying to research a business as if you're going to own 100% of it, and you can truly understand what matters and what doesn't matter for the business to come to its underlying essence. Through this research process, you'll be able to get a good perspective of both the quantitative and the qualitative aspects of Colgate-Palmolive, and you can determine for yourself what's a reasonable intrinsic value for the company, and then compare that to their valuations going forward. That's ultimately how you're going to come to understand if there's a margin of safety in the business here. So with that said, that's it for today's fundamental stock analysis of Colgate-Palmolive Company, ticker symbol CL. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about Colgate-Palmolive with me, and have a great day.